All right, what I'd like to do in this video is just kind of go over some basic concepts, some things that at this point we should already know. Um, in the next video, we're going to get a little bit more involved and actually kind of put together an income statement for a manufacturing company. However, before we can do that, we need to make sure that we understand some of the concepts. So we're right here, which if you're in the class would be roughly slides 45 to 52. And so we've got some terminology and then some other little things, some analysis type questions that I want to go over. It says here gross margin percent equals. Well, before we can determine what gross margin percentage is, we have to know what gross margin actually is. Yes. And so when we talk about gross margin as a percentage, we need to think about an income statement. And I'm just going to put this out here in order. We've got our sales revenue first, and then we're going to have our cost of goods sold next. And then, cost of goods, sales revenue minus cost of goods sold is going to equal gross margin. So we've got some numbers here, and sales revenue is always going to be 100% of sales revenue. But gross margin will obviously be a smaller number. So all we have to do here is just rearrange this with gross margin as the numerator and sales revenue as our denominator. And if we do this, gross margin is always going to be the smaller figure because it's what's left over after cost of goods sold has been subtracted. So this will always produce a percentage less than 100. Okay, let's see what we've got here. This straight, if I can. Says Knowles and Foreman Company took the following data from its income statement at the end of the current year, and they want to know what was the gross margin for the year. Okay, so fair enough. So in order to answer this question, what we have to kind of understand, well, it's not really kind of, it is what we have to understand. We need to know, how do we get to operating income? Now, that's not what the question is, but the information that we have here, this per unit cost, is not going to help us because we don't have, it could help us if we had some more information, but we don't. Now don't get me wrong, we have all the information we need, and this is actually a very, very easy question. This gross margin percentage is not going to help us. What we need to know to answer this question is what is the formula to come up with operating income. And that's where, if there's any little trick in this question at all, that's the key. So if we think about what is operating income, well, operating income is revenue minus cost of goods sold, and that's going to give us gross margin, which is what they're asking for. If, however, whatever this magical gross margin number is, if we subtract out from gross margin minus selling and administrative expense equals operating income. So, if that's true, all we have to do to answer this question is simply add these two figures here. That's it. We can take 30,900 plus 10,300, and that's going to give us, I think, 41,200. Let me make sure real quick. 3,900 plus 10,300 equals $41,200. Let me clean this 2 up a little bit. And that's it. Now we can also, this paper keeps getting crooked. We can also test that, and we can say, okay, if gross margin is 41.2, and we were to subtract out selling and administrative expenses of 30,900, that's going to give us 10,300 operating income. Therefore, this is a correct answer. Okay, bear with me 1 second. I want to jump around just a little bit here. This first question is pretty involved, but I want to look at this next question here, Wright and Boyle. Basically, what it says here, they've got all of these figures here, and they want to know what was selling expense percent, operating income percentage. They could ask us for a whole host of things here. I just want you to understand what it is we're doing. What we're doing here is called vertical analysis, which, you know, if you take accounting 1 with me, we actually study this in accounting 1, and it's very, very simple. So all they're really asking us to do here, selling expense percent, well, they've given us the selling expenses as 86, 199, and 20 cents. And so whatever they're asking for, that's always going to be our numerator. And our base is always going to be sales revenue. So no matter what they ask us for, our denominator is going to be the same. And I'm actually just going to go ahead and set this up. Let me move this calculator out of the way. What is the second thing? They want operating income. Okay, and operating income is $91,891.60, and that's going to be over that same sales revenue figure. We could do this, like I say, you know, we could do this for cost of goods sold. We could say, if there was a number 3 here, we could say what was cost of goods sold percent, and that would be 217,766.40 over 470,800. But let's just stick with what they asked us for. Sure, that's right. Okay. Whoa, what did we do there? So basically 18.3%. And then we have this other answer here, which is going to be a little bit larger number, 91,891.60 divided again by the same sales revenue, 19.5%. So not exactly rocket science. But you know, you could see this question pop up somewhere. Now we should know the answer to this question because we just did something where we had to figure out what's operating income. We had to use operating income to calculate something a little bit more difficult. So, and I gave you the equation actually. Operating income equals what? Let's just see here. There it is. Operating income equals sales revenue minus cost of goods sold minus selling and administrative expenses. We could have said, now I want you to look at choice B. It says gross margin minus selling expenses. The only problem with B is that they haven't included administrative expenses. Okay? If they had said something like gross margin minus operating expenses and they had just lumped everything in there together, that would have been okay. That would have been a correct answer as well. But because they didn't, because of the way they set this up, they needed the word administrative. Choice C says sales revenue minus cost of goods sold. Well, this is the formula for gross margin. And choice D is, it's an equation, but it's not one that we're ever going to use. So choice A is going to be our answer. Just one little follow-up. Sales revenue minus cost of goods sold equals gross margin minus selling and administrative expense comes up with operating income. We can actually calculate operating income technically without establishing what our gross margin is. We can just subtract out gross margin and selling and administrative expenses, and that will give us operating income.